Good afternoon. Lots of stuff going on, but yet the markets go nowhere. Yes, I know they're up, but in the big picture, we're really just where we were last week at this time. Okay. I'm late. No, 45, I said. I made it clear. Look, the bombing, okay. I didn't have any idea how the markets were going to open last night. I would have thought lower, but I've been through these things before and you never know. And of course, they did open lower and then they took off. And then they broke hard. I put a note in the chat room. I thought they could be lower, and then they collapsed, and then of course they took right off again. And I think it's interesting to watch, these numbers and these markets, okay? Because again, you see things happen all the time. I mean, here is, I don't want that. Get rid of that. Okay. So you had the market open lower, went higher, came right back down to support, and took off. And of course, earlier this morning, our friend the captain in the NASDAQ said that he would think that the 2018 would be a sell. That was the stiff high of that move before the break. Okay. So here you go. And of course, they took off and then they came back down. And then, of course, they took off to the upside. But at the end, like I said, bottom line is we're nowhere different than we were last week. Okay. So you can see that this market is struggling to find direction. Okay. It is sitting sideways, whether it's going to take out the new high or it's going to collapse. I have no idea. I mean, right now we're just in this very slow, dull market trade, which of course, in dull markets, you should tend to either stay out or to be long. Okay. You don't really want to sell into a dull market. And again, that's a big overall perspective. That's not, minute by minute or tick by tick. From an overall perspective, dull markets tend to rally. Okay. And that's something that you have to keep in mind. Now we have a real lack of participation. You would have thought that volume would be much heavier based on what was going on over the weekend. But so we bombed Iran. We shut down their what they call proportional response, and the markets took off. But once again, we're nowhere. Okay, we're still talking about stupid shit like the Fed and if they're going to cut or not. And again, what you guys don't seem to understand, or what people don't seem to understand, is a Fed rate cut does no good for you necessarily. Okay, we've already gone through this a number of times, but just a reminder. A year ago, or actually a year ago, September, when they made the first cut, the 10-year notes were 3.5%. Okay, now they're 4.5%. Okay, so they went up 100 basis points. The rate at which the banks borrow went down 100 basis points. So the banks are making 200 basis points more. We got nothing. So why you're so excited about a Fed cut or not Fed cut is kind of silly because it doesn't really matter. They shouldn't cut, but we'll talk about that later. But at the end, I mean, there's a lot of news out there, and you can see we've gone from a true trading market to a market that is very much, what's up, brother? That's very much driven by little snippets of news. Okay. The sell-off this morning, I think, was based on the response. I don't follow it all, but again. At the end of the day, okay, we've got issues everywhere, okay? But that does not mean that markets should go lower. And of course, crude oil, as we've been talking about, was a great sale last night on the opening. If you made it, again, listen, I don't expect anybody to make those types of trades. They're scary, okay? But it was an outstanding opportunity because it did blow off to the upside last night. Okay. And it gave you an opportunity, and the difference, it was a $10 swing from top to bottom. Okay. Now, again, I'm not looking back after. I told you all along that these are positions that you're looking to sell. A week ago, 10 days ago, here was a potential sell opportunity. You got the sell off. Here was another sell opportunity. You got the sell off. They're not always going to work. Okay. But if you're prepared for that and you can look at this market without an opinion, without emotion, without worrying about what's going to be tweeted or what President Trump's going to say, then you're going to have a much better opportunity. I mean, I assure you, when the captain came out with his 2018, 2218 to be the exact, in the NASDAQ, he wasn't worried about what Trump was going to say. Okay. And I think that's, you have to learn to recognize that you just look at the chart of the market, okay, and you look for the opportunity. Now we're underwater in some of our ratios, and again, I get that. I'm not making excuses. I'm not worried about it. Okay. I know that we will get the move to get us out and to make a profit. But at the end, sometimes you got to suffer and go through some of this crap for a while. Because again, when you're dealing in an environment like we're dealing in, which is, again, I'll go back to the same thing to repeat for the third time today. We've gone nowhere. Okay. Last week, the captain and I made a bet. I think we were at 60-80. Is that right, Captain? That's where we were. We're dead in the middle. You said 61-66, and I said 6,000. Is that correct? I think that was where it was. So here we are. We're right in the same spot we were when we made the bet. Okay. So all of the gyrations and everything about this market didn't do anything to change the perspective that we're still buried deeply in consolidation, that the markets really don't have any true interest. And again, that being the case, the side to err on, if you're going to make an error, is to be long. And I'm not encouraging you to run out and get long, but anybody who's been in the markets for any length of time will tell you that dull markets tend to go higher, okay? Because that's what we see, okay? And you've got all kinds of issues out there, all kinds of news. We all know that the economy sucks, okay? But yet the markets are higher. So the economy and the market don't relate to each other. At some point, they will catch up, okay? But what's it going to take, in somebody's opinion, what do you think it'll take to get a big sell-off? In your mind, what would it take to get a big sell-off? Okay. There's a couple of things you could think about. Anybody guess? Raising rates could be. Okay. But that hasn't seemed to do the tricks considering mortgages are 7.5%. But yeah, that could be. Anybody else got a whirl, a guess as to what it could be? A liquidity problem? We already have that, but yeah. Okay. I mean, most likely it's going to take sleeper cells, dollar. I don't know about the dollar. World War III, well, that would not be good. But I don't know. But again, do I know for a fact of any of these? No. But in my guess, my educated guess would be, we get some more participation in, and you see some sellers show up, and they start to overtake the buyers. But more likely, it'll be some sort of an event like a banking crisis or a banking collapse, once again. Okay. If you go back to 2008, 2009, and you look at what was going on during that time, it's virtually like what we're seeing right now. Again, I'm not saying it's going to be the same, but it wouldn't surprise me. Would it surprise you? Okay. We're seeing the same action. Markets are doing things that don't make sense. They're certainly overvalued from an economy standpoint. But again, it doesn't really matter because the end of the day, the market is always right. Okay, so you can never say the market is wrong. And right now, as we get usually on our Monday afternoon, we're getting that late little bit of move. But if you look at from the move this morning, here was the low, here was the spike higher, and they've gone straight sideways for the last 3 hours. Sideways, sideways, sideways to higher. Okay, but there's been no trading action that you could take advantage of, really, if you're looking to hit spots. But at the end of the day, when we look at it, you go, okay, so I have to wait. This is where the patience has to come in, that you have to wait. And this is why you're hedged, if you're hedged, because it doesn't matter. You don't care where the market goes. If it keeps going up, you keep making money. If the market gets these big dips, you get a chance to roll in and roll out. Think about if you were in Coin or Tesla or a few of those. Look at all the rolls you got in those in the last couple of weeks. So again, you have to have an objective as to what you're trying to get done. and where you're going to be. Because again, as long as the bulk of what you have is hedged and protected, the rest is all nothing because eventually you'll make the money back. Does that make sense? If you're not hedged, you should see a doctor, that's for sure. Retail bankruptcies seem to be yes. There's a million reasons I can give you why the market should go down, but it's not. So I'm not going to sit here and tell you that we should be shorting the market. Yes, we have on some short bias positions based on the ratio trades we do, but we're not naked short. We're not just getting fractured because it's going down. And again, I think you have to remember that you have to protect your core assets. Okay. So if you have, let's say you have 500,000, if you have 400,000 protected, then you can play with the 100,000 because the 400,000 is only going to grow. It ain't going anywhere. It's going to grow bigger. Okay. But the other side of the coin is that you can also sit back and be hedged and wait for what would be better opportunities. Because listen, we'll get opportunities again. I've seen this again. This is again, I can remember like it was yesterday. This is very similar to '08, but actually the trouble that you started to see began in the end of '07. I believe the trouble we started to see in this market began last year. And again, there's no trouble. The market's going up. Okay. But I'm saying that there's things that when you look at it from a logic standpoint, don't make a lot of sense. Okay. But again, this is why we always teach you, you don't fight the tape. You don't fight what the market is doing. Nobody's going to be able to predict whether it be bottoms or tops. You have to have a reason to participate on either side. Whether you want to be long or short, it doesn't matter. You need a reason to get in. Crude oil, you had a reason to get short last night. Okay. And another opportunity this morning. Okay. But again, if you didn't, it doesn't matter. Okay. You should never worry about the trades you may have missed. Okay. Because let's face it, there are going to be plenty of trades to make. Okay. If you're finding and missing opportunities in this market, imagine the opportunities you're going to have when the markets get busy again. Okay. Does that make sense? Okay. So, and if you choose to not trade in this market right now and just stay hedged, that's okay too. There is nothing wrong. All I am in personally here. I traded today. Okay. I traded 42 contracts today. Okay. Again, I trade somewhere near 1,000 on a regular basis. Okay. I traded 42 futures today. Okay. And I'm comfortable with my ratios on, and I'm comfortable being hedged, and I'm comfortable turning the machine off, going to play golf, and doing other things. Okay. Because again, the markets are going to be here at least 241 days a year. Okay. Pretty soon it's going to be 365, but at least 241 days a year. There is no dumb question. Why enter a hedged? Why enter a hedge over just exiting the market until you get buy indications? Because when you want to carry and build a long-term portfolio that you want to compound and you want to make money on and not have to think about it and never be forced out, if you are hedged, then you don't have to worry about when the markets go down like this and you end up buying a lot more stock on the way down. So when you get the rally back, if you're not hedged, you're making one of the biggest mistakes in your life. You're missing the greatest opportunity to compound money that you could ever imagine. And ask anybody who here who's hedged how big an advantage that hedging your overall portfolio is. Again, trading individual securities for trades, that's one thing. But if you're holding securities in your retirement account and you're trying to build wealth and you're trying to compound, then there is nothing better in the world than hedging your portfolio. I hope that answers your question. Okay. But if I was that good, okay, then I'd just be trading. I'm a pretty good trader. Okay. But I still have 90% of my market, of my money hedged. Hedging, tell them I quit hedging and left 1 point. You did, yeah. This is a true story. One of my guys stopped hedging for a while, thought he could time the market a little bit. It cost him, didn't cost him. He made 1.3 million less than he would have made if he would have stayed hedged. How's that? Okay. True story. He just gave me the permission to tell you about it. Okay. Again, I think you have to recognize where there is opportunity. And the more that you try to trade actively with all of your money, okay, the harder it is to trade. When you know that you have safety in the bulk of your estate and the bulk of your money, then you know that you can afford to take chances and be in and out of certain things. Okay. Does that make sense to everybody? It's very important. Okay. All right. Connie, I know you're ready, but as always, I give you the courtesy of saying, are you ready? So the dollar continues to churn in Nowheresville, 97 to 99. It did try to break out last night and, of course, came tumbling down once again. At the end of the day, again, we don't trade it, and we only don't trade it because we have to pay 120 bucks a month in New York, so screw them. Again, 97 to 99. There's already talk about the dollar now being the reserve currency. The whole story. You know what I say to all that? Bullshit. Okay. There still is not an equal to us yet. Okay. When there becomes an equal to us, then we can worry about the dollar being the reserve currency. The euro currency was lowered, obviously, and now it popped. The levels remain the same, 114 to 117. Nothing is, again, here we are in the same period. Nothing has really changed. Okay. Other than you're getting a nice little rally here at the end of the day. Okay. It's interesting that they're rallying into the close when who the hell knows it's going to happen overnight, right? But anyways, the notes, a little bit of a rally trying to break out. Okay. They are back above their 200-day moving average. We are short. Okay. The notes, I would say 112, I would be a blind seller. I am working orders at 112. Okay. I think that probably 111, 110, I would look for. I'm going to give it a little wider range now because of all the interest rate talk. So 110 to 112. Okay. The bonds, which were long, okay, they're trying to break out and they're still substantially away from their 200-day moving average. But until they break out here, 115 is resistance, 112 is support. Okay, 115, 112. Bitcoin, nice recovery. Came down to our support level at 100,000, just a little bit below. We're still 100,000 to 112. Nothing's changed. Okay. And I think you're seeing the consistency in these markets that right now nothing wants to change, right? Nothing seems to be able to get out of whack. Everything's kind of just buried in these very tight little ranges. There's a few things. Gold, same thing. Okay, we have no position in gold, but gold is still 33 to 3,500. We're dead in the middle. Okay. So again, there was some nice movement in gold today. There was some opportunity if you were trading it to make some money today. But at the end of the day, the question you always have to ask yourself is, do I want to put myself at risk when at any moment, okay, there could be a tweet or a news item and the market it could go in my favor. Again, it doesn't always have to be against you, but it could go against me. And I'm at the mercy of a thin market. I mean, I had to stop today. I was short a Dow future. Okay. And I got to stop. I got filled 20 ticks above where my stop was. How's that? That's what you talk about a thin market. Okay. So fortunately, I was locking in profits. Only took away the profit. But again, that's what happens when you get markets that are extremely thin. Okay. Silver, which again is just churning. I think you're 35 to 37. We are short. Platinum, look at this go. Now, platinum is making a nice move. Now, we don't trade platinum because it's too illiquid for all of us. But any individual, look, I'm not selling it here. Okay. I would consider selling it over 1,300. Okay. But probably higher. But I'm in that interesting conundrum. I don't like being in thin markets when these things are going on. I need some more liquidity. But for today, I think you're looking at 1240 to 1,300. 1240 to 1,300. And we would be short. If we had a position, it would be short. Copper, look at this. It hasn't moved basically in 3 weeks. Okay. There's our range, 475 to 493. Same range we've been talking about every single week. So you can see the lack of overall activity in this market. Okay. Grains. Now this is interesting. And this was a great sell. And I'm not telling you should have made it. Trust me. This is just I do as you if you don't know, I do farming TV twice a week or 3 times a week. Okay. And I told them, okay, on Thursday, actually Friday morning, that I would be a seller up in here. Not because I'm negative, but because again it got overextended and you figure a pullback. And I think right now you've established the levels of 560 to 590. Okay, that's in wheat. In corn, this is a little bit disturbing. Now we're long corn, okay, and I would be a buyer. I would be a continued buyer, but this is a little bit disturbing. It's starting to break down, okay, versus the other two that are churning in between levels that are very easy to read. All of a sudden, corn has decided to break down through our support level at 430. So what's next? Well, the next I think is probably 410. Okay. Now, if you were someone who said, you know what, I'm looking to take a shot somewhere, this would be a good spot to take a shot. Okay. I'm not encouraging you, but if they get to 410 overnight, I have orders working at 410 myself to add to my position. Okay. But I think you're 410 to 430 right now. Crude oil is on its low of the day right now, down 630. Soybeans, here you go, churning in a range. Nothing has changed. 1040 to 1080. Now, for those who've been coming long enough, you know that's a pretty narrow range in soybeans, but that's what the range is right now. So what should I do about that? Should I make the range different because it used to be different, or should I trade the market I have right in front of me? I didn't do well yet, honey. I'm looking at my stuff trade on the side. Okay. So again, 1040 to 1080. Nothing's changed. The cattle markets, a little bit lower. Again, I still have not reshorted yet, okay, because we're still basically heading higher. I need this thing to consolidate, make one more pop. Now, we don't trade it anymore, but for me, we were looking at 212. So now 212 turns from support into resistance, and now we go to 204 support. Okay. And if it bumps up against 212, I will look to be a seller at 212 if it should get back there. Okay. And feeder cattle, which I do not trade, but again, did come up and reach the level, and now we're breaking down. So now 305 becomes some resistance, and now our new support would be about 295. Hogs, looking for a spot to sell. Okay, I have not found one yet. Okay, but I am looking for a spot to sell here because again, they are extremely overbought, and if you look out in the curve, you see how much cheaper they are, and this has gone basically straight up. I would say right now, I'm not going to give you a firm number, but if we get to 115, I will be looking to sell. Okay, there is really no resistance right now. I think you're looking at 110 to 115. Okay, natural gas again reached the peak at $4, came right back down. I think you're looking at probably, 350 to $4. It's too bad we didn't get filled when we wanted to buy them back there at like 280. That was back here. All right. Again, that's part of life. That's where you have to make the decision as a trader. Do you want to chase numbers? Okay. I choose never to chase or try never to chase. Don't get me wrong. I'm as guilty at it as it is anybody, but I try to be more disciplined and not chase a price. Okay. But I don't get what I want. I just move on because there's always another market to look at. Does that make sense? Okay. And crude, which I just said is on the lows of the day and making new lows as we speak. Well, we can clearly see 78 is the resistance. Okay. I would think now you got to look at 64 as the next potential spot. It could be even lower. I mean, now you can see how we went from very narrow trading ranges, even though crude was moving higher, to extremely wide. Okay. Back in here, a standard deviation was $1.50. Now a standard deviation is $9. I mean, 450, excuse me, 450. So again, it wouldn't be much of a stretch for it to get back down to 64 or 62. Okay. I would be more looking to sell into rallies here and not little rallies. Again, when I say a rally, for my money, I'd like to see crude, if it went back to 72, I'd look to be a potential seller. Okay. I'm not in a hurry. Okay. Again, we know that this particular product should be going lower based on the agenda of this administration. Okay. But we also know about what's going on in the Straits of Hormuz, what's going on in Iran, what's going on in the whole Middle East, which still has an effect on the price of oil. Okay. So here you first have to be prepared to take bigger risk than you would normally take. You can't make this trade with 5 or 10 ticks worth of a stop. Okay. Does that make sense? If you're trading crude, okay, on a longer term basis, you have to be willing to risk on a little one, on a micro, one micro, you got to be willing to risk $100 minimum. Okay. And that's still kind of stretching a little bit. The true risk on this should be around 200. Okay. And you can make the money there. But again, some markets sometimes are better not to trade. Okay. And again, I'm not dissuading you or encouraging you. I'm telling you the simple facts that last night was an easy sale. Now I'd have to look for a potential spot to buy. Okay. But again, I'm not really overly anxious, and certainly not overly anxious in carrying a naked position here, just because, again, the turmoil, even as disciplined as we can all be and as lack of emotion as we can all show. Now I'm the exception to that rule. Okay. But the lack of when you can't control yourself, you're going to make a bad decision when you get a market that's just wild. So you got to be very careful. Okay. Any questions on part one? Anybody before I flip it over? Oil was 64 to 78. 64 to 78.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.